Hi, everybody. This is Robert Chadwick with America Mortgages. Thank you very much for joining a super interesting webinar. We will have Nick Hill from FiberPay, our newest partner when it comes to FX transfers and proper planning when it comes to investing with US real estate using FX. So with that said, thank you, Nikhil, for joining. I appreciate it. I know it's quite early in the UK, but how the webinar will go is you'll present your deck. Just let me know when you need me to adjust the slides. And then after I'll present America Mortgages and our loan programs and so forth. And then at the very end, we'll have a question and answer. So for all the people watching, if you could hold your questions to the end, or if you can add them into the chat, we'll be addressing them as soon as the webinar is over. This should probably not take more than 40 minutes. Unless there's a significant amount of questions. So with that said, Nikhil, thank you. You want to introduce yourself, and I can start the slides whenever you're ready.
Sounds good. Thank you, Robert, and thank you for having us on the webinar today. As Robert said, my name is Nikhil. I'm the head of partners here at FiberPay. I've been in the FX industry for 12 years now, and helping clients move money around the world. So it'd be good to present what we do, and obviously, if there are any questions, happy to go through them at the end, as Robert
Perfect.
said. So
Okay.
yeah,
So with
happy
that,
to.
I shall start the slides, and we can go from there.
Yeah, we can
Are you
go
seeing
to
it?
the next slide, I think. Yep.
Okay.
So just a quick introduction to the questions we'll be covering today, and why FX is so important to when it comes to sort of overseas investments, or investing back in the US, and sort of being aware of the currency management and the risks they possess. So at today's session, we'll cover understanding the payment process, the cost for using a bank and using a currency broker, fees involved in FX, what strategies you can utilize when it comes to sort of currency movements, and some other methods to sort of be a bit more clever about your purchases and the timing of it. So next slide, please, Robert. So FiberPay, we are founded in 2021. We have three offices. So our main office is in London, because that's where we're based. So it makes a lot of sense. We have a back office in Buckinghamshire, and we have just opened our office in Portugal as well, in Quinta del Lago near the golf course. So if there's any keen golfers, and you happen to be in Quinta, feel free to pop in. We are 95% private client focused. So we speak to investors or property purchases day in, day out. All our reviews are 5-star on Google, and that's because of the service we offer to our clients. They're all independently verified. Not a single review is below 5-star. We're specialists in foreign exchange and high value transactions, and since inception in 2021, we've done over £1 billion in foreign exchange. That figure probably is now closer to 1.2, 1.3 billion. So, we are moving and helping a large number of clients. We are positioned more like a sort of private bank with the level we offer. We do over 100 different currencies, 180 countries that we cover, and we're trusted by private wealth advisors all over the world, real estate, lawyers, mortgage brokers, and beyond. So our primary goal is to help as many clients as we can save when moving funds abroad. Next slide, please. So who are our clients? Our clients are, as I said earlier, 95% private clients. Around 35% of our business or client base are US nationals, either in the US still or still US tax residents. 40% from the UK, and the rest is from Europe and APAC. So The most common transactions that we assist with are property transactions, tax payments, so IRS, HMRC, second passport investments, wages, salaries, shares investments, and wealth structures, which are the most common reasons why clients would use us, but not limited to that. Other way, please, Robert. Yeah, thank you. Key benefits. So a lot of people come to us and say, I already use my bank. Why should I use someone like yourself? So we know today we offer private banking level service. A lot of businesses or a lot of platforms that you tend to deal with, it could be for shares or investments, or just your high street bank. You find a lot of them are going onto platforms, a lot are become faceless or pushing you towards speaking to robots. That's not us. We have a team in place. If you do, speak to any of us, it'll always be sort of a human on the other side. You'll have a dedicated account manager available to you. We are not limited to traditional banking hours. So, we regularly take calls very early in the morning or very late at night, depending on the times and the clients are in. So, we're not traditional 9 to 5. We're fully flexible in terms of your needs. Um, and we still believe in that human element. So we're not going down the robot way or pushing clients to a platform. So key benefits and value. Just on screen now, you can see how much cheaper we are compared to some of the major banks. So if you look at the middle section where it's always Citi, Bank of America, and Chase, if you're sending $500,000 to the EU, we're quite clearly significantly cheaper than most of those banks, or we're getting you a lot more euros on the other side, so to say. So if you're sending $500,000, Chase would be giving you 424, Bank of America 427, but with us you'll be closer to just over $434,000 on euros on the other side. So giving you more value for your money and sort of avoiding the banks absorbing fees where not needed. And more commonly, the fintech banks. A lot of you may have come across Wise, who are an online only platform. But even when it comes to them, our rates are significantly better as well. Plus, you obviously get the human service to go with it. So account capabilities. All our accounts are in the client's name. So if you do register with us, you don't send money to FiberPay, you'll have an account in your own name, 39 different virtual accounts. So if you've got exposure in various different parts of the world and various different currencies, we can manage it all for you in one place, all accounts in your name. So you may be living in Singapore, for example, still have a property in the US where you're receiving rent. We can give you a US dollar account in your name where you can receive the rent from, and then you can convert it into Singapore dollars and then move the funds across. So, what we do find is when US nationals do leave the US, the bank accounts do get shut. And we can give you a local account out there with in your own name with local clearing as well. So, which not many other providers can do. So speed and efficiency, we're a lot quicker than traditional banks. We can provide same day settlements within an hour. Most banks can take 3 to 5 working days to clear funds. We can offer a same day payment. We're part of the Swift network, so we can provide you real-time tracking of the payment as well. So when you do create an account with us, you'll have an online login where you can then see where my money is. You can see where it is, if it's been received or it's been stuck somewhere. You get the full chain of process on there. And we've got local collection in the UK, Europe, Canada, and the US as well. So the most important clients always ask how secure we are. So we're fully secure. We do all our banking with Barclays in the UK, which is the biggest bank in the country. We're fully FCA regulated. We wouldn't be able to operate in the industry if we weren't. And we use a network called the Currency Cloud. So Currency Cloud is owned by Visa. Visa, obviously, if you look on your card, more often than not, will be provided by Visa. So Visa are a global payments institution. So we run our payments network on the back of their network. So you're protected, all the security is top of the line, and all the latest technology has been implemented to make sure funds can be sent and received safely and very quickly. But in terms of everything we have in place, there is no real difference to using someone like us or a major bank. The security element is exactly the same. Next slide, please. So market guidance. We support clients throughout every stage of the relocation. And foreign exchange is obviously quite an important element around that. So Currency markets move every 3 seconds, and the market's obviously moving up and down depending what's happening around the economics. The current war in the Middle East, maybe GDP's down in one place, and stuff like that all affects the currency market. So our job is to make sure you're aware of what's happening in the markets, how that affects your purchase. Is your cost going up? Is your cost going down? And then helping you time that transaction to make sure you're maximizing your returns on the other side. Again, most major banks won't give you any of this. You'll call up your bank, or you'll walk into branch and they'll just give you the day rate. Our job is to obviously help you maximize your returns on the other end. Next one, please. So just an example of how currency rates can fluctuate. So if you look 9th of Feb 2026, dollar euro rate 118, coming down to March 114, 4% difference. So if you look at 4% on say $500,000, that's a $20,000 swing against you, or in this case, for you when you're sort of selling sterling. But that movement, some people $20,000 is a considerable large sum of money, and it can make your investment unaffordable should markets move against you. So speaking to someone like ourselves and helping you manage your timing and making you aware of what's happening can make a significant difference going forward. Next slide, please. So what drives exchange rate movements? I also just touched on earlier. So interest rates, Bank of England, Bank of America, the EU, GDP, employment, inflation, political events, everything around all of that can affect the currency markets. Obviously, at the moment, there's a war in Russia, Ukraine, which has put inflation up in Europe. You've obviously got the Middle Eastern war ongoing. All of that, fluctuation in oil prices. So all those factors determine where the FX markets are going. So it's a lot to keep up with. And what you don't want to be doing is sitting at home currently constantly watching the currency markets and thinking to yourself, can I still afford this property? What's going to happen tomorrow? That's our job. And if we can take that stress away from you and give you a bigger picture of what's happening and where to expect the rates to go, then obviously we can help you with your movement there as well. Next one, please. Time creates both planning opportunity and market uncertainty, as we just touched on the different factors that are ongoing that could move the market. So consider it, our job is to tell you what's happening, and if we can tell you great news, dollar has weakened, meaning you can actually purchase more USD for SGD or wherever you are in part of the world. It's a great buying opportunity. You can take advantage of it. On the reverse side, if the markets have moved against, again, our job is to make you aware of what's happening and then give you the best and worst case scenario to help you plan ahead. And these factors are all important when you're sort of looking to invest overseas. So the different types of contracts we have on offer. The most commonly used contract is a spot transaction. So it's, hey, FiberPay, we need $100,000 today. What's your rate? We'll get you the live rate at the time. We'll book in the currency, send the funds on. As simple as that. It's all done, within a couple of minutes. Funds received in a couple of hours. Transaction completed. So a spot transaction is the most commonly used transaction. From time to time, clients also want to use a forward contract. So the best way to describe a forward contract is a buy now, pay later sort of scheme, where you can lock in a rate now, but you don't need the funds for say 6 months. We need a small deposit, but what that does mean, it fixes the rate for you. This takes away any uncertainty in the market, and if the rates do move against you, you're already secure. The funds are in place. You send the funds in when you're ready within that time period. We'll send the funds on. Simple as that. Market orders. You may have a target rate in mind. You may want euro dollar to be back at 120, for example, before you purchase your dollars. Again, we can sort of put an order into the market. Currency markets are active 24/7. And if the market hits like that 120 level, for example, at any given time, it will just buy the currency for you. At that point in the time, you settle the funds, we make the payment on it. So that's if you've got a particular rate in mind that you have to stick to, you can put a market on there. So and the alternative is a layered execution, where say you need half a million euros, and what you do then is you split that transaction up into say 5 transactions of 100,000. You move the funds bit by bit, just to sort of take advantage of the market movements without sort of committing the full amount in one go. So that sort of balances out any cost versus savings. It's quite a safe approach because you're not sort of committing one way or the other, but it does leave the option on the table should the rates improve in your favor. And obviously happy to go into more details on these should anyone have any further questions on them. Next slide, please. So just a quick case study of how it works. So the first example is actually a forward contract where we fixed the rate in advance. It was an American family buying a property in London for 4.3 million. We locked in the rate ahead of time. And what that meant is that family actually saved around $60,000 when it came to the currency transaction. It was just before the Middle Eastern war kicked off and the dollar sort of fell back a little bit. So their savings there were quite significant. Similarly, a sale of property in France where the funds were repatriated. We were able to give them a named account in the EU. So France's banking system is quite old and quite bureaucratic. So you need your own account out there to be able to receive any proceeds of a sale. So we were able to give them the client a named euro account, receive the euros in account, then send the dollars on back to the US. And then the family sort of relocating back to the US, sold the property in London, and we moved the funds back to the US quite simply. And a few more. So we can send and receive funds from the IRS. So obviously in the US, even if you leave, you're still liable for your taxes out there. So we can help both send and receive um, rebates from the IRS. So should anyone have any exposure to there, then that's something we can assist with, and we do it on a regular basis. And lastly, sale of shares held in the USA. So if you have investments in the US and you've sold shares that you currently hold in US dollars that you want to sort of repatriate to the UK, the EU, or somewhere in Asia, again, we can receive the dollars, convert them on, and then send them to you as well. And thank you.
Thank you very much, Nikhil. Super interesting. And I think even more so, besides just the forward contracts, which I think can save people thousands throughout the year, but on an average real estate transaction, the time for us to, I guess, transact from the application to closing is anywhere from 30 to 45 days.
Yep.
So, in essence, if somebody wanted to take advantage of the FX before they transfer their down payment, they could actually reach out to you in the beginning of the transaction. And then when they or you guys see that it's an opportune time to move the money into escrow, they could do that. And who knows, there could be, an uptick in basically sort of take a percentage off or more,
Exactly.
on the transfer. So
Yeah.
maybe you can kind of explain how that potentially could work.
Yeah, absolutely, absolutely. As we touched on, the rates move every 3 seconds, and there's obviously a lot going on politically that's moving the market. So if there is an opportune time, we can always exchange the funds early, hold them on account with us in an escrow account separate to the business funds, as you just said. And what that does mean is, for argument's sake, markets move 3 or 4% in a month on average. On $500,000, that's a £20,000 difference, so or $20,000 difference. If we can offer that saving, that is pushing the budget up that little bit further. It's increasing the property purchase you can buy. It may change the property type you can buy. You can have a swimming pool, you can have an extra bedroom. So if we can help push that up a little bit by helping time that transaction, that could change completely the property you're looking to purchase potentially.
Hmm, okay. Now, obviously, we have AML that we have to compile or,
Yep.
be compliant with. Uh, when they're moving their funds from, say, an account from London or Singapore or wherever it may be, and they're moving it to a fiber pay account, is that still remains in their name? So okay, perfect. So you
So
wouldn't
in the
have any
client.
AML issues then.
No, not at all. So we can get accounts set up within 24 hours. All we need is passport copy, proof of address, and a bank statement.
Oh, absolutely fantastic. And then when it comes to forward contracts, how would you recommend that somebody does this? Not so much on, I guess, on making payments, but actually receiving their funds and being able to send it back, or even making their monthly mortgage payments. How would you suggest somebody go about doing that to be able to take advantage of the FX?
Absolutely. So when it comes to monthly mortgage payments, that cost is obviously fixed. What it's not fixed on is the FX rate because that fluctuates. The cost that they're sending in, so argument's sake, say sterling to dollar, that sterling cost is constantly fluctuating because the markets are moving. What we can do is lock in 12 months worth of mortgage payments in one slot, say $20,000 every month. Then you know your $20,000 are costing you £1,400 for argument's sake, and that's fixed, guaranteed. You can put that money aside. What you don't want to do is, your mortgage every month is going from £1,400 to £1,200 to £1,600. You can't budget for that. You're left with nasty surprises. So a forward contract is a great way to sort of fix your cost, eliminate that risk. And because your cost is fixed in one currency, it's not necessarily fixed in the other currency. So a forward contract is a great way to sort of secure yourself against all those fluctuations and help you budget ultimately. Because what you don't want to be doing is you get paid or you have X amount of budget allocated to this, and that suddenly gets ripped apart because the markets have moved against you. So utilizing a forward contract for those cases, it's ideal.
Yeah, I think actually you can use it to your advantage as well. You actually may be able to make a little bit of money on the transfer and so forth. Yeah. Okay, well, excellent. Thank you for your presentation. Super informative. I'm sure this is going to be a very successful partnership. What I'll do now is I'm going to go over our slides. It shouldn't take very long. And then after this, we'll have a Q&A section. So for anybody that wants to answer a question, there is a chat question area. Just please feel free to put it in there, or you can put it into the chat. Also, within the chat, there is a link to actually connect directly with Nick Hill or his team to be able to speak to somebody, to be able to schedule a call, and also with America Mortgages. So, as we're 24/7, depending on which time zone you're in, you can book a convenient time on a calendar very easily. And that's all within the chat. So, you can do it at any time during the webinar. So with that, Nick Hill, you're welcome to stay on the camera, or you're welcome to go off and do your thing. But please come back after we're done, and we'll do the question and answer.
No problem. I'll be right here.
All right, fantastic. Okay, so again, thank you everybody for joining. I'll try to get through this very quickly. This is a new slide deck that we have. So if you've been on our other webinars, this actually may be a little bit new, and hopefully, we'll all learn something. So most of you, or maybe you all, are aware, but every year, between 60 and $100 billion of US real estate is purchased by foreign national. And you can imagine with, this is very, I guess, with what's happening in the world, FX is highly important when it comes to transacting these property purchases, or making payments or whatever it may be. So with mortgage rates, we expect to see some easing. We did not see movement when everybody expected potentially an increase, so I think that's been to our benefit. We're also suggesting that, certainly if somebody buys now, that we will see an uptick in equity, assuming that, they push rates down, which is what they want to do. And depending on what's going to happen with the global situation in the war in the Middle East, I think we'll be able to at least forecast it's going to be a fantastic year for US real estate. So in general, if you're a foreign investor in the US, so when I mean foreign investor, I mean both foreign national and US expat, because even as a US expat, for a traditional bank, they will consider you as a foreign investor. For us, we are fine with either a foreign national or a US expat making their income in a variety of currencies. So for us, foreign income, foreign tax returns, foreign bank statements are perfectly fine. For banks, they do not fit their guidelines. So if you're ever a US expat and you've gone through the process, it's funny because they seem to kind of let you go 1 or 2 weeks in, and then they find out, you're earning your currency in euros or Hong Kong dollars or whatever it may be, and then the loan is a no-go. So for us, it's absolutely not an issue. No US credit, of course, with a bank is an automatic decline. For us, that's something, at least for a foreign national, is what we absolutely expect. But we've even had programs, and we've recently closed a loan for a US expat that had been abroad for many years and just no longer had a US footprint. So, we can be very versatile. And I think when it comes to the way banks are very stringent in how they look on things, we look at things in, I guess, more of an opportunistic way. We want to make sure that we're able to service you and we're able to give you the loan programs that not only that you need, but that you deserve to be a real estate investor. Um, and I think the third one is something that people really don't value enough. For us, every single loan that we see are clients like yourself. For, a broker in the US, say you're buying something in Ohio, for example, and you call around and you call some broker, of course they're going to say, yeah, yeah, we can help you, whatever. But literally, they're going to see probably one US expat or one foreign national for 1,000 US citizen loans that they would do. And that's a recipe for disaster. For us, this is all we do. This is our expertise. And this is why we're the industry expert when it comes to foreign national lending. Let's go to the next one. Okay, so the three paths to qualify for US mortgage financing. So we'll go over this more in the loan program. So I'll briefly go over this. But number one is you qualify on the property. This is actually common sense underwriting. It's called a debt service coverage ratio, or as everybody seems to be knowing these days, is DSCR. We were doing DSCR before DSCR was even a thing. So with a DSCR loan, rather than showing personal income documents, you're qualifying on the cash flow of the property. So it makes perfect sense, especially when you're buying an investment property. Next one is you're qualifying on foreign income. This is really if you're buying a holiday home, second home, or maybe relocating back to the US. If you're a US expat, you're using your tax returns just like you would use in the US, your US tax returns. You do not need a W-2, and foreign income and currencies and whatever is perfectly fine. If you're a foreign national, likely or it would be very difficult to go through everybody's tax returns. So we make it absolutely simple. What we need is a letter from your accountant if you're self-employed. If you're employed, it's a letter from your employer, and we have a very simple template that they can follow, and it just states 2 years of income gross and current year to date. And with that, we use that exactly as we would use tax returns. And if like clients from the Middle East, this is absolutely perfect because they're not filing taxes. So it makes the process simple, easy, and straightforward. For high net worth clients, we can qualify on your liquid assets. That means stocks, bonds, cash in the bank. There's no encumbrance on this, but it allows a very simple, clean process for for high net worth individuals, whether expats or foreign nationals, to be able to qualify for a US mortgage. Probably one of the easiest loans that you've ever done. So, what actually do you need in order to qualify for a US mortgage with American Mortgages? So, you'll need a valid passport, proof of current residence. I mean, it could be pretty much anything. Down payment, we need to see that that money has been sitting in an account for 60 days. that, or say maybe if it's a sale of a property or sale of a stock, for anti-money laundering purposes, all we just need to see is a trail out 60 days. So your loan offers can explain how it makes sense. And it's again, everything that we do is truly based on common sense underwriting. And I think it actually makes sense as you go through the process. What we like to see is that the borrower, is mainly on a purchase, that the borrower has 6 to 12 months reserves. There's no encumbrance on this reserves. What they're looking for is if something happens, maybe the property isn't rented or whatever it may be, that you're able to cover the mortgage payments. So the reserves is actually 6 or 12 months of mortgage payments that are sitting in the bank, an investment account, your retirement account, whatever it may be. And then, of course, the signed purchase contract, if you're that far ahead. What you don't need, and what is very commonly asked, you do not need a U.S. Social Security number. You do not need U.S. credit. You do not need U.S. residency. And if you're from a visa-free country, which is quite a bit, you do not need a visa. You do not need tax returns. And I think one of the beauties of this, especially if anybody is watching from Europe, there is no requirement to open up a bank account and deposit a minimum amount while your mortgage sits there. So it's everything that we do is dry lending. Okay, so why market selection matters more than ever. The old playbook or what people used to do is, they're buying in the big coastal cities. They're buying in LA, they're buying in New York. That's no longer the case when it comes to actually, especially when you're looking at DSCR investments. It's really a cash flow strategy. And we have a lot of data on this that we can share with you. Our research team at American Mortgages has spent a lot of time creating various booklets that are available online. You can email myself or you can email our company and we can share these with you. You can go to our website, americanmortgages.com, and you'll be able to see this as well. But I think, excuse me. I think what you need to do is look at real estate investing not in an emotional way, but really in a pragmatic way. So cash flow markets, again, this deck will be available. There's going to be a recording sent out to everybody, but you can see the returns in the US. So the gross rental returns are absolutely fantastic. And if you have proper tax planning, realistically, you should not pay any taxes on the rental income that you're earning on the properties, at least in the US. And just like FiberPay, who's now a partner and available on our website, you also can see US tax accountants that we know also specialize in this type of product. So everything that we do, we try to make it as turnkey for our investors as possible. And so you'll be able to find everything in the concierge section in our website. And for us, there's no extra charge or there's no add-on or whatever it is to make any of these things available for you. So again, we'll be sharing this with you, but this gives you just an idea of some like fantastic growth markets and the reason why these are growth markets. It's either low taxes, industries moving into these markets, whatever it may be, but the demand for rental properties is extreme in these. And because we offer 30-year fixed mortgages, regardless of the age of the borrower, in all 50 states, in all of these markets, you're going to figure the rentals are going up and as the years go on, but your mortgage payment is fixed for 30 years. And if you could do these forward contracts with FiberPay, you potentially actually are making money on every single transaction. So what this means for you as an investor, okay, so our a lot of sophisticated investors that we deal with, we have a lot of repeat clients that are constantly using us, maybe every couple months to purchase a new property. They go off of the whole thing, marry the property, but date the rate. They can always refinance. They can always get a lower interest rate when the market moves, but you're not always going to get a property today at the price that you want. We it's still a buyer's market. When it reverses and interest rates come down, who knows, maybe towards the end of the year, it's going to turn into a seller's market. And then you're going to be paying, 10, 20%, maybe more than, what you would potentially pay today. So 30-year fixed loans, again, very unique to the US because again, it's not tied to the age of the borrower. It's not tied to, a working age. It's not tied to a specific age that banks or, the government's kind of set for amortization. Whether you're 19 or 99, you get a 30-year mortgage. Refinance opportunities, I think it's still going to be great if you're able to pull cash from the properties now and to be able to buy new properties. And of course, you hope you just kind of hold on to it and you wait until interest rates drop, you get some forced appreciation. I think again, what makes us quite unique is our ability to there's no limit on the amount of mortgages you can get, and it doesn't affect limitations. Like, say, if you have one or 10 mortgages at 75% loan to value, that's not an issue. As in many countries, the more properties you have, perhaps the lower loan to value you would have on, the additional properties, or maybe you're not even able to get a mortgage. Again, because the US has such a vibrant secondary market when it comes to mortgages, this is not an issue. So what the US can offer, again, that most global markets cannot, and what makes the US an amazing real estate market for investors, 30-year fixed mortgages, it's absolutely amazing. We even have programs that, if you feel interest rates may be a little bit higher now, or your goal is to maybe exit the property in 5 years, we can do a fixed 10-year interest only that'll roll into a 30-year fix after or 20-year fixed after at the same rate. So I speak to one of our loan officers, fantastic program. I'm based in Singapore, so I'm very aware of stamp duties. Certainly, Nikhil, you see the UK has this as well. The US has no stamp duties. Certain places like New York or California will have, a mansion tax or whatever it is, but even that is still relatively low. So, no stamp duties. And I think our favorite and our most popular loan program is the DSCR qualification. It truly is common sense underwriting when it comes to buying investment property. Um, Again, I don't think this is the only the US can offer, but certainly, it's a very clear legal process in the US. There's no issues with title. Everything is title insured. So if you own this property, this is your property. You're not going to have a government change, and then they're going to come back and say, oh, hey, this purchase was not legitimate, and they're going to take your property. The U.S. is very, the transparency of law is very clear. U.S. dollar reserves. Some may be in favor, some not, but it's always to have a U.S. dollar in theory account. And if you're owning U.S. real estate, I mean, obviously that's U.S. dollars. Market depth and liquidity. Again, the largest real estate market in the world, most transparent, and something that even during the financial crisis, and I've gone through this myself, when we saw the properties dip, they're going to return. And right now we have such a shortage in inventory. I believe it's something $3 to $5 million. I mean, 3 to 5 million shortage of homes. I mean, this is a huge opportunity to be able to, take advantage of that. How to build a U.S. portfolio without living in America. You can get pre-qualified for a loan. get the letter, you identify the property, you finance the property, you close remotely, and we can go over this later, and you can manage it from everywhere, and then you refinance after 6 months, because that's what you're going to need to hold it to use a new value, and then you do it all over again. Scaling your portfolio, again, buy, appreciate, refinance, repeat. Exactly what I had said before. So the general overview for our mortgages, and we have probably another couple minutes on the slides before we get to the questions, but America Mortgages is a direct lender and a broker, meaning that if there's a loan program out there or if there's better pricing, we are by far going to be able to find it and be able to provide it for you. We have no markups just because we deal with foreign nationals or expats. You're going to get the exact market rate. So purchase, refinance, or equity release, up to 75% financing for a foreign national, up to 80% for a US expat, 30-year amortization, regardless of age, the 10-year interest only that we had talked about, loan programs in all 50 states. So you really can choose where you feel like you want to invest. You qualify on the rental income, not your salary. Foreign income allowed if you're, using the property for self-use and you need to qualify using income. We, excuse me, we allow for non-US citizens and expats living overseas. Of course, no credit or residency required, and again, no AUM. How it works is everything is done on our secure portal. You apply for a loan, takes literally 8 minutes to fill out the applications, just answering questions. You supply, I mean, if it's a purchase, you're going to show that you have the down payment and your passport. Takes, we say 72 hours, but really we're issuing it in 24 hours. We're going to issue a pre-approval letter. You have 30 to 45 days from application to closing, and you can sign your documents in the country that you're living in. So certain countries you can actually sign at a local notary. Other places you may have to go to a U.S. embassy or consulate. And in certain states and certain counties, we actually allow for an online notary signing. So whatever it may be, we have this down to a science, literally. And I think one thing that we're super proud of, and I'm really, I guess, proud to be one of the founders of America Mortgages for this very reason, is 97% of our loan applications, when it comes to DSCR, are approved. And if they're not, it's normally an issue with the property and not the borrower. We have 24/7 service. We have loan officers based around the world, speaking a variety of language. You can reach somebody at this number above. You can email. You can again go into the chat and you can book a meeting directly at your convenience. But we're not restricted to this 8 to 5 in New York or whatever it may be, or we have an office in Houston, in Florida, wherever it may be. You're going to be connected with somebody that's in your time zone, and if needed, speaking your language. So the loan programs, we'll kind of blast through this quickly. We sort of went over all of them in the beginning of the slides, but our most popular program is the AM Rental Coverage Plus, and it's actually the DSCR program. So we're not going to ask you for any personal income documents. It is going to be the easiest, cleanest mortgage that you've ever done. So you're qualifying only on the rental income of the property. We can do loan amounts as little as $100,000. And, really we can go up to any amount on this. But of course, because it's qualifying on rental income, I think anything, once you're over around 800,000, it makes it a little bit difficult to qualify, at least on the highest loan to value on DSCR. And of course, 30-year fix and interest only is available. If you're curious how this works, and if you look at the explanation below, it's based on the gross rental income. The property does not need to be rented when you make the purchase. When we order the appraisal, we're going to order a supplement to that, and that supplement will tell us exactly, just like we would say the value, it would also tell us what the average rent should be, and that's what we're going to use to qualify. Simple, easy, and clean. As long as the mortgage can cover the tax, I mean, the rents cover the mortgage, tax, and insurance, the loan will qualify. If for some reason it doesn't, it's either you're bringing in a little bit more money, or we actually have loan programs that can go below the DSCR level and loan programs that have no DSCR level. And this is where our 97% approval rate really comes in because we can be so creative in how to get these loans approved. Well, so the AM Expat Investor Plus. If you're a U.S. citizen, a green card holder, you're filing U.S. tax returns, you still maintain U.S. credit, you are golden. We will have the same rates and same programs as your brother and sister that is living and working in the U.S., walking into their local bank, but you do not need to have a W-2, and we're perfectly fine with foreign earned income. This is something banks just do not do. This is something America Mortgages does every day. So it works same as a regular U.S. mortgage. It is a regular U.S. mortgage, but it works on your debt to income ratio. And we want to be at least 40 or at max 43% of your gross income and your mortgage payments. The Investor Plus. So say you're a foreign national and you want to buy a holiday home. You want to buy, a ski chalet in Vail. You want to buy something in California because your son or daughter is attending school or whatever it may be. And the property is going to be used for self-use. As you can imagine, because we're doing loans from Sydney to Shanghai to, wherever it may be, if we had to go through tax returns, it would be an absolute nightmare for our underwriting. So what we do is we make it as simple as possible. Again, because this is all we do, we understand you as the borrower. So we have a template, and I went over a little bit about this in the earlier, but we have a template that you'll need to follow. And if you're employed, it's from the letters from your employer. If you're self-employed, it's from your accountant. And it states 2 years of income at current year to date. That's it. That's how the income will qualify. So it's a fantastic way to do it. This one has a little bit higher minimum loan amount of $150,000, but it's a very clean, easy way to do it. And you can get up to 75% financing. Absolutely fantastic. Okay, going the wrong way here. Okay, high net worth clients. Again, we addressed this slightly in the beginning, but if you're a high net worth client or you have clients that are high net worth that you look after, this is a very good loan to qualify. Again, no personal income is used to qualify. You're going to qualify on their liquid assets, and we're going to use that as with a calculation in order to be able to get their income. Again, there's no encumbrance on these liquid assets, but it's merely used to qualify. So the day after the loan closes, you could sell it, you could trade it, whatever you need to do. And if you're, say, a private banker that looks after clients, you're not going to lose any AUM because there's no AUM required for this loan. Again, absolutely beautiful loan. So that's our whole American Mortgage presentation. I'm sure that there's a lot of questions for myself and for Nick at FiberPay. So we will start that. And Nick, if you want to come back online, we'll start answering the questions. So how it will work is I'll read the questions. If it's relevant to you, then please answer. If it's pertaining to mortgages or something along that line, then I'll answer. And again, if somebody would like to reach Nick Hill or Nick Hill's team, within the chat, there is a link that they can connect directly, or if they want to speak to a U.S. loan officer, to talk about the loans, or whatever it may be, you can go in and you can link in that as well. So, Nick Hill, first question. Why should investors consider using a specialist payment provider instead of their bank when purchasing U.S. real estate?
Um, Timing, advice, and fees. So Banks won't tell you what's happening in the markets. There's no guidance and there's no service element to it. They'll just give you the day rate, which the rate is there, but there's nothing there leading up to that. We can help time that transaction, making sure the cost is minimized or your return on the other side is as much as it possibly can be. And the savings are around 4%. So we save clients on average 4% compared to the high street banks. So, 500,000 is a $20,000 saving. And our service is free. So we don't charge for the service. We get paid by the banks where we're putting the deals through. So from a client's point of view, there's no fees, there's no commissions, there's no additional costs. So, um, all in all, it's, you know, 4% savings is on its own is quite sufficient, I'd say.
That's absolutely fantastic. It's almost a no-brainer on why everybody wouldn't use this. Yeah, thanks for that explanation. Next question. What is the most common foreign exchange mistake international property buyers make, and how can they avoid it?
Leaving things to the last minute. A property purchase, you know you're doing it almost 6 months out. You're viewing properties, you know something's going to happen, you've thought about it. You're speaking to lawyers, you're speaking to mortgage brokers, you're speaking to relocation companies. That plan is already in place. A lot of people don't realize that currency is equally as important because the markets are fluctuating and then there's different options available to sort of maximize or work around your budget. So leaving things to the last minute, you're giving yourself the least amount of time to try and take advantage of the market. And if the market have moved against you, I have seen cases where clients have had to lose properties or pull out of deals last minute because it's unaffordable.
Very, very, very good answer. Next question. How much do you charge, and how long does it take to open an account?
No fees. So as I said earlier, we get paid by the banks, so we don't ask for any fees. We don't get any commissions, and opening up an account can take up to 24 hours. So it can be done same day, but safety net 24 hours.
Okay. Well, actually, quite quick when you think about it, especially if you're going to be planning this. Normally a property purchase isn't a spur of the moment thing, right?
Exactly. Yeah.
Okay, next question. How much are interest rates for foreigners? So I guess that would be addressed to me. And I think the easiest way to explain it, obviously interest rates change on a regular basis. But a foreigner or somebody with no U.S. credit, no U.S. income, etc., their interest rate is going to be about 0.5% to about 0.875% higher than what a U.S. citizen would pay with excellent credit and income. So we do loans all around the world. I mean, American Mortgage's parent company is Global Mortgage Group, and we do loans, all over. And if you look at foreigners, the U.S. has I think the slightest variance when it comes to rate. Next question. What is the timeline from application to getting keys? I'm assuming this means from when you complete the application to when you close on the property, and it's anywhere from 30 to 45 days. So it's exactly what it would be, again, if you were working in the US and buying a US property. Next question. You mentioned the loan programs where qualifying is based on the property. Can you explain further, and Doxit needs to be rented at the time? Oh, and does the property need to be rented at the time of the loan? Again, the documents that would be needed for pre-approval would be really just showing that 2 months of bank statements, because we need that 60 days to be able to show that you have the down payment, passport, and really that's it for a foreign national. And the property does not need to be rented when you purchase it because we're going to use the appraisal or valuation to be able to determine that. Next question. Can FiberPay assist with ongoing transactions such as mortgage payments, rental income transfers, or proceeds from future property sales? Nico?
Yeah, yes is a simple answer. We can do all of those. You don't need to be part of the process to come to us to use the service. You could be ongoing, you could be well in, you may have already made some mortgage payments and want to move over to us to make the remainder. Absolutely fine.
Okay, perfect, perfect. Okay, the minimum loan amount or property value for a mortgage. On average, our minimum loan amount is 100,000, and at 75% loan to value, the purchase or the property, or if you're going to be refinancing or whatever it may be, should be at least 150,000. And again, I think if you look at the world globally, being able to buy any property for 150,000 that actually has decent returns and a stable real estate market, the US is it. Next question. How do I get pre-qualified and is there a cost? So it's everything is done online. We have no cost to get pre-qualified. Once you're pre-qualified, you're in our system, really, unless your financial situation changes or the loan program changes, you're pretty much pre-qualified for one. Okay, next question. For investors purchasing a property against multiple countries or currencies, how does managing cross-border payments differ from single straightforward transactions? Nico?
I mean, if there's multiple jurisdictions involved, chances are there'll be multiple different currencies involved, and hence different things you need to look at. So, if it's a straightforward transaction, it's from one currency to another. It's quite simple to manage funds across. But if there's multiple jurisdictions involved, you mentioned Singapore, Hong Kong, US, UK. For argument's sake, if a client has properties in all four jurisdictions, you then have to manage funds in four different countries and four different currencies, and they're all moving against each other. So we then need to look at, right, where do you want your currency to be? What currencies do you need to sell to get there? Do you want funds in one place? Do you want funds in all four different places? So it becomes a bit more complicated because there's different factors involved, different current interest rates involved. The banking systems are different in all countries. So you then need to speak to someone like us to help you manage all those and time the transactions between them as well to sort of minimize your costs.
So I think it's a great answer. And I always say this basically for everything. You should always use an expert, especially when it's coming to this type of,
Yeah.
real estate investment or, whether it's for the mortgage with American Mortgages or, FX transfer with FiberPay. And I will tell you, we used to have another group as FX transfer, and they're no longer in business. And we did a lot of vetting when it came to FX companies that we were going to partner with. Obviously, everything that we partner with, we have to stand behind, and we really felt that FiberPay was the best partner for us. So, last question. What factors should investors consider when deciding whether to lock in exchange rate during a US property purchase?
So a couple. A budget, how tight are you? Is your budget be all end all if the markets move 5 or 10%, can you still afford the property? If the answer to that is no, then clearly the forward contract is the best way to go. You take out the risk element, you secure your cost, you put that money away, you're done. Secondly, it's also a bit of a personal choice. So, when I speak to a lot of clients and ask them, "Are you a gambler?" The chances are, more often than not, clients will say, "No, we're not." So why would you want to gamble against the markets moving against you? These things, as you know, are always the gamble. You can't control what's happening around you. You can't control what's happening politically. So, um, you got to take those factors into account. And the main question is always, is the property affordable where the markets are now? If the answer to that is yes, forward contracts definitely the way to go. What you don't want is you go through all the work, with yourself, and through mortgages, through conveyances, through different legal departments, to get to a point where suddenly you can't afford the property anymore. Well, you could have 6 months ago if you locked in a forward contract. So, um, always ask yourself, can I afford the property if the markets move 5 or 10%? If the answer is no, forward contract is the way to go.
No, fantastic. So that'll be it, and we'll end the webinar there. Nikhil and your FiberTay team, I want to thank you guys for everything. I really appreciate the time that you spent this morning for UK time to be able to assist. Again, if anybody is looking to speak to Nikhil and his team within the chat, you'll be able to link directly with them, and of course the same, with a US mortgage or loan officer. So with that said, thank you very much. We really appreciate everybody that stayed on for the full webinar, and we look forward to working with you. Nikhil, thank you. Enjoy your day, and we'll see you soon.
Yeah, Robert, thank you. See you soon.
Bye. Cheers.
Bye bye.